Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings, and today Humacyte's latest report is a real nail-biter, especially with their new product finally hitting the market. Humacyte is a company that's been working on developing bioengineered human tissues, and they finally got their first product. SIMVAS approved and starting to hit the market in the US. This report covers their performance up to June 30, 2025, and it's a pretty interesting picture of a company transitioning from development to commercial sales. A key date mentioned is August 4, 2025, when they had 158,372 shares of common stock issued and outstanding. Scroll as of August 40, 25, X1558 frame 170.38. 770 through a 177 scroll, so this is helpful context as we look at their financials. Let's dive straight into the financial tables. If we look at the balance sheet, Humacyte had about $38 million in cash and cash equivalents as of June 30, 2025. That's down from almost $45 million at the end of 2024 to about $26 million by June 2024. This suggests some of the conditions related to this liability might have been met or adjusted. Now, looking at their income statement, this is where things get really interesting for a company like Humacyte. For the 3 months ending June 30, 2025, they reported their first product revenue, a modest $100,000 worth of SIMVAS sales. They also had contract revenue of $24,71,000. This is the very beginning of commercial sales after years of development. However, the story here is also their expenses. Research and development costs are still very high at $22 million for the quarter and $37.4 million for the 6 months. Selling, general and administrative expenses also jumped quite a bit, from about $5.7 million in the first quarter of 2025 and from $11 million to $15.9 million for the 6-month periods. This increased spending is clearly tied to their commercial launch efforts. One of the striking numbers on the income statement is the change in fair value of contingent earnout liability. For the 3 months ending June 30, 2025, this was a gain of about $5.5 million, a huge swing from the $25.6 million loss in the same period last year. For the 6-month period, they reported a gain of over $44 million compared to a loss of $30 million in 2024. This volatility in non-cash items significantly impacted their net income. Because of these swings, especially the gain on the contingent earnout liability, Humacyte actually reported a net income of about $1.5 million for the 6 months ending June 30, 2025. This is a massive turnaround from a net loss of over $88 million in the same period last year. However, it's crucial to remember that this net income figure is heavily influenced by that non-cash accounting adjustment related to the contingent earnout. Their basic loss per share for the quarter was negative 24 cents, and for the 6 months it was a positive 1 cent, which really highlights how that one item is moving the needle on a per share basis. When we look at the cash flows, the picture is a bit different. The company used $55 million in cash from operations during the first 6 months of 2025. This is up from about $48.66 million used in the same period last year. This higher cash burn is likely due to ramping up commercial activities. Financing activities brought in a significant amount of cash. For the 6 months ending June 30, 2025, they had about $48.9 million in net cash from financing, mainly from their public stock offering. Last year, for the same period, they had $62.3 million from financing, which included proceeds from their purchase agreement. It's important to note their restricted cash remained at about $50.2 million, which is tied to an agreement as mentioned in their notes and indicates funds not readily available for general use. Diving into the notes, we learn more about the company's liquidity. They mention that the cash on hand, plus the ability to sell more stock under their common stock purchase agreement, should be enough to fund operations for at least 12 months. This is a common statement for companies in their situation, but it also signals that they might need to raise more capital down the line, especially if sales of SIMVAS don't ramp up as quickly as planned. They explicitly state that their future viability of the company beyond that point is dependent on its ability to generate cash flows from the sale of SIMVAS and raise additional capital to finance its operations. As for inventory, Humacyte capitalized about $11 million worth of it in early 2025. This is a big step as it means they believe commercialization and future economic benefits from selling these products are probable. This is a positive sign indicating confidence in their product's marketability. The company also has a derivative asset related to a common stock purchase agreement worth about $672,000 as of June 2025. This is an accounting item reflecting the value of their ability to sell stock in the future. The contingent earnout liability is a big driver of those non-cash gains and losses we saw on the income statement. As of June 2025, this liability was valued at about $26.7 million. The notes explain that these valuations rely heavily on assumptions about future stock prices, volatility, and other factors, making them quite subjective. Looking at their stock-based compensation, the company granted over 7 million stock options in the first 6 months of 2025. This is a significant amount, reflecting their strategy to use equity as an incentive for employees. The total value of unrecognized stock-based compensation costs is around $30 million, which will be recognized over the next few years. Now, for some of the non-financial but equally important details, Humacyte is facing some significant legal challenges. There's a class action lawsuit claiming misleading statements about their product and manufacturing facility. Additionally, there are derivative lawsuits filed by stockholders against current and former directors and officers, alleging mismanagement and responsibility for damages stemming from the class action. The company disputes these claims, and it's currently impossible to estimate the potential financial impact, but they acknowledge that a negative outcome could be material to their business. It's also worth noting that some of their top executives, including the Chief Financial Officer and Chief Commercial Officer, had trading plans that either terminated or were updated. This is common practice for executives looking to diversify their holdings or manage their personal finances, but it's always something to keep an eye on in terms of insider confidence. So what's the story here? Humacyte a major win with the FDA approval juncture. They've achieved a major win with the FDA approval and are starting to bring Symvess to market, and that's fantastic. The swing from net loss to net income on paper is largely due to accounting for future obligations, not necessarily reflecting strong operational profit just yet. Their expenses are high as expected for a company scaling up, and they acknowledge their future success hinges on both product sales and the ability to raise more capital. The legal challenges are a significant risk factor that could impact their financial stability and reputation. In my opinion, Humacyte is a high-risk, high-reward company. The potential for their bioengineered tissues is enormous, and finally having an approved product is a huge step. However, the path to profitability is still long and uncertain, with high operational expenses, ongoing R&D, and considerable legal hurdles. They need Symvess sales to ramp up quickly to generate the cash they need to control their own destiny, rather than relying solely on further equity financing. Alright, that's our breakdown of Humacyte's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think they can turn those early sales into significant revenue and manage their legal risks? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and make sure you subscribe for more deep dives into company financials. Also, we have a fantastic community discussing these things over on our Discord server with the link right in the description. Thanks for watching. See you next time.